Moving along from that, though, this is still the open. It's great to have you here with us. Let's just check in with Marcus Bogdan. He's joining us from Blackmore Capital. Marcus, it's great to have you here with us. Talk to us about that point we were just discussing, that there might be this lift happening in equity markets. I mean, the third consecutive day of gains for the Australian market, but we've got some pretty bad news to get ahead of and to digest as well.
Good morning. We do think that the market has run ahead of investment fundamentals. It's definitely being supported by incredible strength in economic support by governments and central banks, and the healthcare outcome, particularly in Australia, has been better than anticipated, and that's incredibly encouraging. But valuations now, assuming that earnings per share growth will fall anywhere in the vicinity of 20% plus, puts the market on around 18.6 times, which is above where it was on February 20. And so we think that almost 30% premium to the long-term average of around 14 times for the Australian market is just too high, given the prospect of much lower earnings, particularly in the short term in this financial year, and that will also occur in the new financial year in 2021.
Now, does that mean that you're sitting out of the market entirely, or are you potentially more defensively positioned, waiting for the opportunity for some of these riskier names?
No, we're certainly invested. We can hold up to 25% cash, but we are tilted very much still to more defensive sectors, primarily consumer staples, Coles and Woolworths, defensive industrials such as Brambles and Cleanaway. Healthcare, I think you need to be very nuanced there. I mean, that is certainly having some impact, but CSL is still a core holding in our portfolio. And more recently, we've added to telecommunications in Telstra, Spark New Zealand and Chorus as well. So definitely pivoted to the defensive, but we do have a couple of cyclical names in the portfolio, and that's BHP and Rio that we think are well supported by a recovery that we're starting to see in China, particularly in civil construction and in infrastructure spending.
Also, hopefully they won't get quite as squeezed on the cash flow as some of these other smaller miners. But what about the whole dividend effect now in the market? It's not just PE ratios that have changed, it's the prospect of dividends potentially disappearing in the immediate term and maybe in the medium term as well. How does that affect your investment strategy?
Sure, and I mean, it's front and centre of our attention at the moment because I think dividends will fall at a faster rate than earnings. And we're seeing a lot of sectors either cancelling or deferring their dividends. I think that'll be particularly evident in the banking sector. But then it comes back to what I was originally saying around those more defensive companies where their earnings are more resilient, and also balance sheet strength at the moment is absolutely critical. So positioning the portfolio more to those defensive elements, so better protection on earnings falls and also dividend falls as well.
As far as the raising environment goes right now, we're seeing companies left, right and centre raising this fast cash. Are there any specific names that you can potentially target to be a participant in some of these cheaper discounted placements?
Yeah, I mean, we saw in the global financial crisis a number of capital raisings, and quite often it was the second or the third capital raising which was most interest. I mean, companies are now very good companies, like Reece are coming to the market for supporting their balance sheet. And I would be looking at anywhere in the healthcare names, if particularly Helios, if there is a capital raising there, that would be of great interest. Companies like Cube would be also another one. So high quality names with very, very good assets and very good potential for earnings growth over the medium term.
Now, Marcus, I know that you spend a lot of your time going out and speaking with company management. We've obviously had a lot of companies coming and releasing statements to the ASX talking about the impact of this pandemic on their business. Are you finding the amount of information that you're getting is satisfactory when it comes to helping you form these decisions about your investment portfolio going forward?
Yeah, I mean, companies are in the same spot. I mean, they're in completely uncharted territories, and so forecasting earnings even from a company perspective is particularly difficult. But we've been able to replace our active company visitation program with a number of sort of conference calls. The use of Zoom has allowed us to keep up to date with particular companies and sectors and strategy calls, both here and globally.
And so when you are considering the commentary coming from companies in particular, what are the sort of key words that you're looking for? Are you looking for some sort of a timeline as to when they anticipate, I guess depending on what sort of area of the market they're in, when sales will return to normal, balance sheet strength? What are the key metrics for you at this time?
Definitely trying to look through the short-term pain that companies are having and how they will look once we get through this crisis. I mean, pathology and healthcare is particularly of interest, where in pathology and diagnostics you're seeing volumes of minus 30 to 40%. But there's an underlying pent-up demand, both and also for private hospitals, that demand will come back once the crisis resides. And so they're the sorts of things of how the company will look, what is the pent-up demand for their services. And I think healthcare is particularly of interest, where you've seen suspension of elective surgery, but that can only go for some time. And you're also seeing that in the more broader community-based healthcare in general practice and pathology and diagnostics.
All right, Marcus Bogdan, thank you so much. We wish you luck as you navigate, as you say, these uncharted waters. We'll look to speak with you in a couple of weeks to see, how things have changed.
Thank you very much.
Marcus Bogdan there from Blackmore Capital, joining us via Skype in Melbourne.